The world of civil aviation is a vast, interconnected network that shapes our daily lives. Every trip you take, every package you receive from abroad, aviation is behind it. But this industry is more than just airlines. It's a massive ecosystem. It includes manufacturers like Boeing and Airbus, engine makers, tech suppliers, and service companies. Together, they move millions of people and trillions in cargo every year. For investors, aviation is both a powerful economic engine and a challenging opportunity. Investing here means owning a piece of this complex machine, whether it's airlines, manufacturers, or maintenance providers. Each segment offers unique opportunities and risks. The story of aviation is one of ambition and constant change. From early flight to today's efficient jets, the sector is always evolving. In 2026, aviation faces new challenges: environmental pressures, global instability, and rapid technological shifts. For investors, this means the landscape is always shifting. Success requires careful observation and a deep understanding of what drives the industry. Investing in aviation isn't just about numbers, it's about understanding the forces that can lift or ground the entire sector. The journey demands attention to detail and a willingness to adapt. If you're considering investing in the skies, you need to know what makes this industry soar and what can bring it down. Let's explore what it really means to put your money in the world on wings. The stakes and the rewards are sky high. Aviation isn't just commercial jets or military aircraft, it's both, often under the same corporate roof. Companies like Boeing and RTX operate in both civil and defense sectors, creating a diversified business model. Defense contracts provide stability when commercial travel slumps. Military innovations like advanced materials and avionics often migrate to commercial planes, giving these companies a technological edge. For investors, a strong defense division can mean resilience and a pipeline of innovation. When evaluating aviation stocks, look at the full portfolio. Is it balanced between commercial and defense? Geopolitical events can have complex effects, hurting travel but boosting defense orders. This dual market presence can make stocks more resilient, but also more complicated to analyze. Understanding this crossover is key to making smart investment decisions. In aviation, the line between civilian and military is thin, and that's a crucial factor for investors. The best opportunities often lie where these worlds intersect. If there's one word for aviation stocks, it's volatile. Profits and share prices swing wildly, driven by factors far beyond company control. Airlines operate on razor-thin margins. Fuel, labor, and maintenance costs can make or break a quarter. A spike in oil prices or a labor strike can erase profits overnight. Manufacturers like Boeing and Airbus depend on long-term orders, but recessions can trigger sudden cancellations. The stock market anticipates these cycles, often reacting before financial reports show the impact. Aviation's boom and bust pattern means these stocks are often better for active trading than long-term holding. The industry's health is tied to the global economy. When times are good, profits soar. In downturns, losses mount quickly. Investors must understand and anticipate this turbulence. Success requires timing, discipline, and a keen eye on external forces. In aviation, fortunes can change as fast as the weather. The key is learning to navigate the storm. This is not a sector for the faint of heart. To invest in aviation, you need to know what drives demand. It starts with the need to travel and ship goods. When economies grow, so does aviation. Business and leisure travel fill seats and drive airline profits. Airlines then order new planes, fueling demand for manufacturers. New aircraft promise lower costs and better efficiency, making them attractive investments. Once delivered, planes require constant maintenance, creating steady demand for parts and services. The aftermarket, or MRO, sector is often more stable than new sales, since planes must be maintained regardless of travel demand. Technological advances and regulatory changes can shift the entire market overnight. For investors, tracking these drivers, from economic health to new tech, is essential. The aviation market is a chain reaction, sensitive to every link. Understanding these connections is key to anticipating where the industry is headed. In aviation, the right insight can make all the difference. Aviation is uniquely vulnerable to global shocks. Events like pandemics, natural disasters, or major accidents can ground fleets and devastate profits overnight. COVID-19 showed how quickly travel demand can vanish, sending stocks into freefall. Volcanic eruptions, hurricanes, or winter storms can shut down airports and disrupt entire networks. Safety issues, like a high-profile crash, can ground aircraft models and damage reputations for years. For investors, risk comes from every direction, not just financials, but unpredictable black swan events. Even the best-run companies can be brought down by forces beyond their control. The sector's fragility is a key reason for its volatility. In aviation, the next crisis is always just over the horizon. Investing here means being ready for the unexpected. Geopolitics and oil prices are powerful forces in aviation. War or regional tensions can close airspace, force costly detours, or cancel routes entirely. Oil price spikes, often triggered by instability, can turn profits into losses overnight. Airlines, with thin margins, are especially exposed to rising fuel costs. Geopolitical uncertainty also dampens travel demand, as people avoid unstable regions. Even distant conflicts can chill international bookings and hurt airline revenues. For investors, this means betting on aviation is partly a bet on global peace and stable energy markets. The threat of conflict can spook markets and send stocks tumbling. These risks are persistent and hard to predict. Long-term forecasting in aviation is always a challenge. Given the volatility, many experts suggest aviation stocks are best traded, not held. The industry's cycles mean buying low during downturns and selling high during booms can yield strong returns. This approach requires discipline, buying when sentiment is negative, selling when optimism peaks. Timing is tough, but understanding economic and industry cycles is crucial. Long-term holding can mean years of losses before recovery. Instead, treat aviation stocks as cyclical assets, not steady compounders. The goal is to ride the upswings and exit before the next downturn. This strategy isn't easy, but it matches the sector's unpredictable nature. In aviation, success often goes to those who move with the cycle. The winds change quickly. Be ready to adjust your sails. Before investing in aviation, recognize the sector's deep risks. Economic downturns hit travel first, making airlines and manufacturers highly vulnerable. High fixed costs and debt mean small revenue drops can cause big losses. Fierce competition drives down fares and erodes profits, especially with low-cost carriers in the mix. Black swan events, pandemics, wars, regulatory changes can upend the industry overnight. These risks aren't minor. They define aviation investing. Success requires a cautious, well-researched approach. Don't be blinded by the glamour of flight. Focus on fundamentals and risk management. Only invest what you can afford to lose. In aviation, caution is your best co-pilot. The sky's the limit, but so is the risk. Thinking of investing in aviation stocks? Start with research. Don't buy just because you know the brand. Dig into annual reports and business models. Check the company's debt and financial health. Strong balance sheets weather storms better. Diversify. Don't put all your money in one airline or manufacturer. Consider ETFs for instant diversification across the sector. Know your risk tolerance and investment timeline. If volatility makes you nervous, aviation may not be for you. Short-term traders can try to ride the cycles, but timing is tough. Long-term investors must be ready for turbulence and have conviction to hold through downturns. Stay informed. Follow news on oil, geopolitics, and industry trends. Being informed helps you avoid emotional decisions. Aviation investing isn't a shortcut to riches, but for the diligent, it offers unique opportunities. Approach with caution, prepare for turbulence, and keep your eyes on the horizon.